30.
In one example itself, there can be more than one thread. All right. So you will get confused. So I'm going to finish off with the just the general idea first, and then move on to the individual examples. All right. Okay. So the
Okay.
next thread is self-review thread. Okay. So like I've told you earlier, an audit firm could do two activities. One is the audit, all right, audit services, and the other is non-audit services. Clear?
Yes.
Okay. So non-audit services can be like accounting, it can be tax consultancy, all right. So whatever the non-auditing people do, it is going to be, examined by the audit services as well. Okay. So suppose A is a company, uh, A is an audit firm who conducts auditing and non-auditing services to C Limited, all right. So when A is going to audit C Limited, A is also going to look towards the non-auditing services that has been already prepared. Clear? Okay. So by doing that, what is A doing? A is going to review their own things, right? A is going to, check their own things that they have done in C, right? Okay. Hasib, suppose
Yes.
A is providing the external audit as well as A is providing accounting services. Clear? And what does an external auditor do? The external auditor is going to check into FS, right?
Yeah.
And if A Limited is checking the FS, then we already know accounting records are being prepared by A Limited itself, right? So they are in a way reviewing their own things that they have done before for the C Limited. Clear? Okay.
Yeah.
And let me ask you one question. Would anyone admit that they have committed, a mistake or error in their, dealing with the client? Would they confess that? No, right? So if
No.
there,
Yeah.
even if there is any accounting records which are wrong, A Limited is never going to admit that they did wrong. Clear?
Yeah.
Understood? So
Mm.
this particular threat is called self-review threat, where the auditor is going to re-examine his own works that he has done for the client. Clear, no?
Yeah.
Okay. And what does this make? This would cloud the judgment. That is, it would sacrifice objectivity and independence. Clear?
Yeah.
Okay. Next is advocacy threat. See, according to every rules and regulations, or according to the need, or all the associations forbid their auditors to advocate their client. Understood? They can't speak for their client. Understood? Okay.
Yeah.
So if there is any lawsuit, auditor can't just go and represent their client. It is not allowed. Okay, unless there is a statutory requirement that the auditor does so. The auditor can't interfere in anything that the client does, or it can't represent the client. Okay, because just the client asked them to do. Clear? Okay.
Yeah.
So it would send a signal to the public that the auditor is always with the client. So they are going to, jointly do something and the public won't know about it. Clear? So in order to clear all that misconception, or in order to, not get into that misconception, ACCA prevents or prohibits the auditors to advocate for their client. Understood?
Yep.
Okay. And if at all they are going to advocate, it would be by the court of law. That means it is a mandatory requirement that the client do so. Clear, no?
Yeah.
Okay. So this particular threat where the auditor or the audit firm is going to represent their client is called as advocacy threat. Okay. And this threat would compromise the objectivity and independence. Clear?
Yeah.
Next is intimidation. Okay. So see, intimidation is the fear of something happening. Understood? Okay. So in the fear of something happening, the auditor is going to abstain doing, certain things in the organization that are needed. Clear? Okay. So this means that whenever there is any error or anything that happens with the client, okay, the auditor is going to turn a blind eye. Clear? Because he fear that something might happen because as a result of it. Clear? For example, the auditor's son is working in the organization. Let's just assume the auditor's son is working in the client company. All right. And while auditing the papers, the auditor has come to notice some, adjustments that are needed for the FS. Okay. But he knows that by doing such thing, he is going to compromise the job of his son. Okay. So as a result, he is not going to, tell that such thing has happened in the accounting records, right?
Yeah.
Okay. So this particular, the threat is called intimidation threat. Clear? And this is going to compromise the objectivity and independence as well. Clear? Now, often in the questions, when there is self-interest threat, there would also be intimidation threat. Understood?
Yeah.
Okay. Next is familiarity. So, as the word suggests, familiarity is when you know the client very well, all right, and due to that, you're not going to, adjust the FS as and when required. You're not going to tell the client that your FS is wrong. You're not going to, bring forward that the client's FS is not true and fair. Clear? Understood? So this is
Yeah.
going to cloud your judgment and so compromise your objectivity and independence. Understood? No?
Yeah.
Okay. So familiarity is when, you already know the client and all these threats that we study may come together as a whole. Clear? That means in just one thing, there might be two threats. For example, yesterday while we were looking into goods and hospitality, we also discussed how there would be a familiarity threat as well. Understood?
Yeah.
In the same way, when we say about shares, owning shares, there would be self-interest threat as well as intimidation threat. Understood? No?
Yeah.
You just take all these and go. All right. So as we have discussed already, safeguard is the action or the measure that we take in order to eliminate or reduce the threat. Clear? Okay. Now, the safeguard by ACCA is categorized into two. Clear? One is safeguard created by profession. Okay. And the other is safeguards created by the work environment. All right. Okay. So
Yeah.
safeguards created profession as in there would be rules and regulation and by legislation, there are certain things that the ACCAs must do in order to follow these, guidelines by the ACCA. Clear?
Yeah.
Okay. And this can be by way of, accepting only those people who have passed the ACCA exam. Okay. That means they are, giving them a boundary where only those who are chartered accountants are required to do audits. Clear?
Yeah.
Okay. So when they do that, what are they protecting? They are actually, providing a quality profession, right? Okay. They are going to provide, they are going to enhance professional development. Okay. It is going to ensure corporate governance. Okay. It is going to give some professional standards. Clear? And it is going to, monitor the client company. It is going to have disciplinary procedures. Clear? So all these things would be managed by the professional association. Understood?
Yeah.
Second category is safeguards created by the work environment. All right. So this particular safeguard is created within the audit firm. Okay. And this would include removing a staff which has compromised their objectivity from the team. All right. Okay. And conducting independent quality reviews. All right. Or, using separate teams for audit and non-auditing services. Understood?
Yeah.
Clear, no? So we have, found repeatedly the word independence, right? So the word independence is also divided into two groups. Clear? One is independence of mind and the other is independence of behavior. All right. So what is independence of mind? See, when you see something, you judge, right? Everyone does. Human beings does, right? Human beings do judge. All right. So when you judge, and when your judgment is not depend on any other thing but yourself, on your views, okay, on your, on your instincts, then that particular mindset is called independence of mind. Clear?
Yeah.
Okay. And this particular judgment is not affected by any undue influence. It is not affected by what happens to you. Clear? So this particular thing is called independence of mind. Clear, no?
Yeah.
So in independence of mind, you're not going to compromise your professional judgment against any influences that are there. Clear?
Yeah.
Next comes independence of behavior. Okay. So independence of behavior is such that, okay, by your exterior outlook, okay, you behave in such a way that, okay, you are assuring people that you are independent. Understood?
Yeah.
Okay. For example, while you are doing audit, there has been some mistakes, and you immediately, act upon it. You tell the management, you tell the directors, right? You tell the audit committee to change it. Okay. So how people see from outside is that you're acting upon the things immediately, promptly, right? So that means you have independence of behavior. Understood? No?
Yeah.
Okay. Suppose you're not doing that. Okay. By your behavior, you're not looking into the things that has been misstated. Okay. You are always careless about the things that are happening in their company. All right. Then by
Yeah.
your behavior, you're showing that you're not independent, or you are actually, ignoring some mistakes that are there in the FS. Okay. And the people are noticing it. Okay. So by your behavior, you're showing that you're not independent. Clear, no?
Yes.
Understood? So independence of mind happens within yourself. Independence of behavior happens with your exterior behavior that you possess or that you show to the others. Clear?
Yeah.
Okay. So always and always, an auditor should be of, should be capable of doing, judging by his own instincts. So his own, or providing his own professional judgment. That is independence of mind. Okay. And an auditor, by his behavior, should show integrity, objectivity, professional skepticism. Okay. So these all things together would show that he has independence of behavior. Understood? Now,
Yeah.
important thing, professional skepticism. Very important. All right. So professional skepticism is such that, okay, you are always and always skeptical about whatever is being provided to you by the management. Understood? So everything that the management provides, you're going to look at it in a questioning attitude. All right. So that is called professional skepticism. Understood?
Yeah.
Okay. Don't sleep. Okay.
No.
Okay. Conflicts of interest, we'll come to that when the others are over. All right. So we
Mm.
start. Okay. Next one, loans and guarantees. Okay. Suppose your client company is a financial institution, or provides bank, or is a bank, or provides, lendings or borrowings to the public. Clear? Okay.
Yeah.
And you have accepted previously a similar kind of loan from that particular company. Clear? And after that, that company has tendered you for their audit. Okay, suppose that is the case. Okay. Or after tender, you have accepted some loan from that company. Clear? Okay.
Yep.
Now, this particular arrangement is generally prohibited. Okay. That means you can't take loans and guarantees from the client. Understood? But but if it is very immaterial, okay, then you can take loans. Clear?
Yeah.
Understood? Now, when you take loan, this should be a standard loan. That means it should be some loan that the client usually provides the public and not something that is tailored just for the audit firm. Understood?
Yep.
Okay. So non-standard loans are also prohibited. Understood? Okay. And no member, no auditee, no audit firm can avail non-standard loans from their client company. Clear?
Yeah.
Okay. Now, suppose you have attained an immaterial bank loan from your client, okay? Then you can do the audit, but your audit work should be, reviewed by an independent reviewer. Understood?
Yep.
Now, if there is, loans and guarantees that are being taken from non-financial audit clients, that means your audit client does not belong to a financial institution, but you have availed some kind of loan from them, okay? Then it is forbidden, but there is a exception. If the loan is very immaterial, you can accept. Clear?
Hmm.
Okay. Fifth one, overdue fees. See, overdue fees is when, okay, you have a repeated client, okay, and this particular client has not given you the previous audit. Understood? So
Yeah.
that is overdue fees, right? They are not making their payments on time. Okay.
Yeah.
So when you are evaluating the threat, there are certain factors you must consider. Okay. And the factors are how much of the outstanding fee is there. All right. And what was the duration of that outstanding fee. Okay. So these all contribute to knowing whether it is a self-interest threat. Okay. Clear? And how much of the threat is there. Okay. Whether it would cloud, the auditor's judgment significantly. Clear? So in order to mitigate this threat, there are certain safeguards. All right. The safeguard is you must tell that client firm to, give you part of the fees. Okay. So the part of the audit fee, overdue fee should be paid. Clear? Okay. So you're going to tell your client firm in order to fully make the payment of the overdue fees, or you're going to make them partly pay your overdue fees. Understood?
Yeah.
Now, when you access such client, you're going to have to make an independent reviewer review your auditing works. Clear? Now, suppose that particular company has a very big amount or a significant amount that is to be given to you. Okay, suppose that is the case. The overdue fees is very significant or very higher than any other fee. Okay, then that particular overdue fees become your loan to the audit firm. Understood?
Yeah.
Okay, so you must decide at that point whether or not to refuse that client, because accepting them would create a self-interest threat. Understood?
Yes.
Okay, no, it's clearer than yesterday, right?
Yeah.
Next one is business relationship. Okay, suppose the audit firm or a member in the audit team has a business relationship with the client. For example, they are involved in being the joint venture with the client. All right, or the client supplier is also a joint venture of the member. It can be anything, any business relationship. Understood? So this
Yeah.
business relationship would create self-interest threat. Clear? Because
Yeah.
the auditor is very much interested in client's success, right? So any adjustments that are needed in the FS, the auditor is going to turn a blind eye. Clear? Now, when you're going to assess this particular threat, you're going to assess whether whatever is being or whatever business relationship that you have with the client company is just like any normal public relationship. For example, you are buying goods from that particular client company, but at a reasonable rate that the public usually pays, then there is no harm. Understood? But
Yeah.
but suppose you have been buying from that client company at a very lower rate due to the fact that you are his auditor, then that is an issue. Clear, no?
Yeah.
Okay, so a firm or a network firm or an audit team member, okay, should always steer clear. That means he shouldn't be involved with creating business relationship with the audit client. Understood?
Yep.
Okay. Now, it is allowed if it is very trivial amount. Understood? Okay. So
Mm.
purchasing whatever is the commodities that you need from your client company, but at a a very normal rate or a standard rate that the client company gives the public, then it is no harm. Okay. Now, if the auditor's purchase or the audit firm's purchase is very high, it is of significant amount, okay, or he has been given a significant discount. Clear? So these all lead to him refusing the client. Understood?
Yeah.
Okay. So we'll stop here, Hasib. I'll go slow because there are too many things. See, the remaining chapters, remaining pages you see are all threads. Understood?
Yep.
So I want to go slow. Otherwise, you will get confused.
Yeah, no
Okay.
problem. So,
Okay. We'll stop there and continue maybe after Eid, right? Next is after Eid.
or we can continue